A lot of people wonder whether their credit card points are going to be taxable when they use them. Like if I take a cash reward, or maybe I use them for a vacation or flight, do I get taxed on the value of those points? Well, it depends, and there's a strategy, but there's a way you can make sure you pay zero tax on your redemption of credit card points. I'm Matt Sorensen. Let's build wealth. All right, now a lot of us use credit cards. We might have a personal credit card we use for our personal expenses, but for you business owners, you've got your business card, which could be amassing a significant amount of points as you use it for inventory, other expenses in your business. Well, how can I use those points and not pay taxes as I redeem those and take the value from them? Also, once you understand the differences in the rules here, there's a clear strategy on how you should actually be using those points, which, spoiler alert, is to pay for your personal expenses and personal travel and vacations. All right, now from a tax perspective, the big difference you need to understand is the IRS is going to tax cash rewards or cash back or reductions on your credit card balance that is dollar for dollar type stuff. So do not use your credit card points for a cash redemption. Do not use your credit card points to pay down the balance of your credit card. These cash rewards, where there's a dollar equivalent, become taxable to you. Many credit card companies will even send you a 1099, and even if they don't, the IRS has said those types of credit card points and rewards are taxable income to you, whether you're an individual or a business. On the other hand, if you use points to redeem for airfare, vacations, hotel stays, they are not taxable. The IRS has basically come out and said it's going to be de minimis for us to collect this revenue, really difficult for us to value those services that you're getting or those goods or trips, whatever it may be. So we're not taxing that. Don't worry about it. The cash rewards, easy, because we know the dollar value and you probably get a 1099 from your credit card company. Now, having known that, the strategy becomes clear. Do not use your credit card points for cash rewards. It'll be taxable. If you're in a 30% federal tax bracket, 5% state, and you redeem $1,000 worth of points for a cash reward, you really only got $650 because you're going to be paying state and federal taxes on the other 35%. However, if you redeem that for $1,000 worth of travel, flights, or a vacation, not taxable. Now I'll just give you my own personal example. I went to Bora Bora on my honeymoon using credit card points and paid $0. We stayed at the St. Regis, we flew first class, did all the great things, and I amassed all of these credit card points, paid no tax on them, and got all of the personal benefit and use out of them for an incredible honeymoon with my amazing wife. But if I redeemed those for cash, I would have been taxed on that, had a lesser amount of value that I would have used to go pay for that trip, which was a personal trip I couldn't expense. There was no business use to it. It was my honeymoon. So the obvious strategy here is use your credit card points, whether you got them on a personal card or a business card, for personal travel, but don't redeem them for cash. Redeem them for flights, hotels, other travel things that you can get from the points that have, frankly, the dollar value, if not better than if you redeem for cash. And you're gonna have a much more bang for your buck and much more purchasing power when using points that way. Now, for you business owners, what you should not do, don't amass your business credit card points and go use them for business trips. Why would you do that? You can't deduct that. Sure, I don't take it into income, but those points that I just redeemed, I could have used personally, not taken into income, for a personal trip that's not deductible. But if I use those business points for a business trip, there's no business expense. I don't take it into income. I didn't spend anything on that business trip. So instead, what I'd rather do is pay from the business for the business trip, take the expense and write-off, because that's deductible, and instead use those business points personally as the owner of the business for my personal travel, which would otherwise not be deductible. Now, if you really want to drill down on this in the rules, there is a notice from the IRS on this. It's 2002-18, and it basically says what I summarized there. Points redeemed for cash or gift cards or stuff that has a clear dollar value traceable to it can be taxable, whereas points redeemed for travel or flights or other things like that are not going to be taxable. And for more tips and strategies on how to save taxes, protect your assets, grow and build wealth, please subscribe to my channel. I'm Matt Sorensen. We'll see you next time.